Forex analysis for the pairs Euro-US dollar and Australian dollar-US dollar. Analysis of the pair Euro-US dollar. The Euro-US dollar currency pair has shown a recovery, hitting an intraday high of 1.0940 during Tuesday morning trading in Europe. This marks the first daily increase in 3 days, bouncing back from its weakest point in a week. The euro's recent upswing can be attributed to a decline in the US dollar, which follows the trend of US Treasury bond yields. The currency pair's gains may also be influenced by the upcoming release of key Eurozone and German ZEW sentiment data for April, which could impact the Euro-US dollar's bullish momentum. Meanwhile, the US dollar index, DXY, has fallen back to 102, with both 10-year and 2-year Treasury bond yields experiencing modest declines at 3.6% and 4.18%, respectively. The potential for a 0.25% interest rate increase by the European Central Bank in May has also attracted Euro-US dollar buyers, despite disagreement among policymakers on whether to opt for a 25 or 50 basis point hike. ECB policymaker Martins Kazaks noted that both options remain on the table for the central bank's May decision. Uncertainty surrounding the U.S. debt ceiling plan, set for release on Wednesday, has further weighed on the U.S. dollar. However, European Central Bank policymakers' indecisiveness contrasts with the market's expectation of a 0.25% Fed rate hike in May, which has bolstered the U.S. dollar. As a result, S&P 500 futures remain uncertain, despite Wall Street posting modest gains. Investors will be paying close attention to the upcoming Eurozone and Germany ZEW survey data, as well as the U.S. housing starts and building permits data for March, which will influence intraday Euro-US dollar moves. However, risk catalysts and central bank discussions will remain the primary focus for determining the currency pair's direction. Analysis of the pair Australian dollar-US dollar. During the early European trading session, the Australian dollar-US dollar currency pair surpassed 0.6720, extending its rebound. The somewhat hawkish Reserve Bank of Australia minutes and a minor retreat in the US dollar index support this revival. Following a robust surge, the DXY has had a modest pullback, approaching 102. Despite this change, the index's optimistic prognosis remains unchanged due to strong fundamentals. According to a study of RBA minutes, officials debated continuing the rate hike, but finally chose to keep rates at 3.6% in order to gather additional information. The Australian dollar-US dollar has made an impressive comeback, creating a solid foundation at the 50% and 61.8% Fibonacci retracement levels of 0.6713 and 0.6690, respectively. The Fibonacci retracement is based on the low of 0.6620 on April 10 and the high of 0.6806 on April 14. The Australian dollar is now trading comfortably above the 20-period exponential moving average (EMA) of 0.6708, indicating a positive short-term trend. The Relative Strength Index (RSI) 14 has moved from a bearish 20-40 range to a neutral 40-60 area, and is currently aiming to break over the 60 mark. If the Australian dollar-US dollar breaks the March 22 high of 0.6759, it may advance towards the April 3 high of 0.6693. Surpassing that level could send the currency pair down to 0.6855 on February 6. A collapse below the April 10 low of 0.6620, on the other hand, might expose the Australian dollar-US dollar to the March 10 bottom of 0.6564 and, finally, the round level support at 0.6500. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.